outside markets, what's going on with the European value of the dollar and that sort of thing?
Well, very, very, very interesting. You know, we've had some articles in Top Producer about the dollar, and we may have to write another one again next fall. But this week, as most people probably heard, what came as a surprise to the market that over the weekend here comes an agreement that they're going to have 900 billion, I think it was, euro funding a fund that was going to supposedly say, all right, we've got the money out here, we're going to help any sovereign debt that needs help, and Greece would be the first one. But this has got to get implemented, and what I found interesting was that 17%, well, I think about half of that fund was being funded by the IMF, International Monetary Fund, of which 17% of that is funded by us. So we're we're paying our tax dollars to go to Europe to help them bail them out. But I guess it's nothing but fair in that they probably bought some of our subprime loans too. So I think they still blame us for their whole debacle. But Greece has got a mind of their own, and they don't believe in paying taxes. And so there's a lot of disconcerting ideas over in Europe about why should we bail them out when they've never wanted to save a dime and so forth, and especially the Germans. So the German population is against it, but the government there had to do it pretty much. And so you've got problems with consumer revolt saying, why should we pay for somebody else's debt when we've got 12% unemployed? So a lot of that is happening, and then there's some thought that Portugal is next, and Spain, and the worst one, I guess, that's kind of coming up is Britain, and in all this, the people that own those foreign currencies now want to buy something that's non-denominated in the euro or the British pound, and that means probably the U.S. dollar. And suddenly, the dollar, which was, if you recall, a few months ago or maybe quarters ago, Russia and even China and the Saudi Arabia and those world emirates that sell us oil wanted to denominate oil in the euro because that was much more stable than the dollar. And I've been itching, chomping at the bit to see that happening because they're not that smart. And I thought, well, the day that they transfer over to the euro, the dollar will get higher, the euro will go down, and then our crude oil that would price maybe at $80 a barrel would be more like $60 in our terms, and we would beat them at their own game again. But they just never got it done, but we're seeing that happen now. So the exodus of currency, anybody that has euro currency wants something denominated in American in dollars, whether, you would think it would be the stock market, but, they like other currencies. But today, the dollar hit new highs, the euro hit new lows. So after all this support this week, thinking that, well, we're going to support the euro, and it was rumored that even China was buying euro dollars, trying to support their currency because they sell to Europe, and they don't want, you've got China denominating their currency right with ours, so we can't hardly win or lose by the dollar going up against China. But against the European, and they are also another export market for them in Japan, they kind of want to hold their currency up so it's cheaper for them to buy Chinese goods. And so here you have this tit for tat type of thing, and suddenly today the euro collapses, and there's some talk that another currency may be devalued further, and the bonds become ratings dropping, and so you've got a literal collapse in the euro currency and in the British pound, and the dollar is hitting new highs. Gold hit new highs. So people are saying, well, I don't want gold, I don't want the euro, and I don't want the Japanese yet. I'm going to buy gold, and so you've got that element out there, and it is a high-priced dollar or a low euro hurts us, just like the Chinese would not like to see a cheap euro because it costs more euros to buy a television set made in China. So you've got that working against us, and I think it was the outside markets today that probably went a little bit towards the commodities because even all the commodities were down, and corn, for one, was down the most, and did some technical damage as well.
I noticed in your morning comments that there were some interesting moves on hertz. Will you be making those available?
Yes, I think anybody that wants them, again, what we usually, you can just connect to our website, www.gulkygroup.com, and it says additional information or something. Just click on that and say, send me the charts that were mentioned in the Top Producer audio, and my daughter will send them out. And I think they're extremely interesting because over the ones that have gotten them in the past, we were talking about bear flags in corn And today we still have that one. It's been about 6 weeks long where you've had kind of an upward channel going. And if you break that channel on the downside, it would tell you that the uptrend is over, and then the new downtrend would probably be another 15 or 20 cents. You would not think that was the case anymore with China being in the marketplace, but I'm leery of them, and as are a lot of people. And all you need is to find out that a cargo of corn got to China, and they're saying, "Wait a minute, you've got a lot of GMO stuff in here. We don't want it. Send it to somebody else." And then I don't know what the market would do. The other thing, the corn market may take a real bath in, and then of course it flows right into China and says, "Okay, now I'll buy it again because it's a dime lower or something." That has happened. Soybeans are breaking some of their longer-term trends, and of course the euro that we had in there this week shows a virtual collapse in it, and the dollar, just to give a person an idea of what's going on. But I think it's we've had these type of debacles in grains before, and I'm not so sure that the money that's out there that keeps flowing in and out of commodities and currencies and so forth doesn't kind of go after the guy that does the chart sometimes and say, okay, we know there's going to be a lot of selling if it breaks that trend line, so we're going to push it lower, and then we're going to turn around and buy it. And a couple of weeks ago we had that with China coming in. We broke the trend, and then here comes China to buy. Now, if they don't come back in and buy again, then we have a problem. But my whole thought process without China has been that we've got such a good crop going, higher acres, and off to a good start that we could very well discount a very good crop going into June before we even got into any weather problems, and that's been held back by China. But if they were to be suddenly absent and say, well, we've got enough now, we're going to wait a few months, then I think it would be a very interesting situation, and there is downside risk. The other thing is the stock market is now down as we speak, a couple of 100 points, 220 points. Very nervous. We did that last week on a Wednesday or Thursday, and the following day we turned right around and made almost all of it back again, and this week we spent some time, did not turn anything technically around, and of course the market digested the euro business, and the dollar went up. That's not good for U.S. stocks, so to speak, and I made the comment last week, what do you think would have happened to the grain market had the stock closed closed down 800 or 900 points instead of turning around only closing down 300. Well, now you've got a Friday and not closed yet. Could go down 200, it could be 300, or it could rally back up again. I doubt it's going to close unchanged. But if the market were to close in Slammer City, so to speak, something happens over the weekend, and does European banks and IMF and people have another basket of money, or do they shoot all the money they have and say this is it, and something else surfaces, and then it's really negative on Monday, and we get grains and gold and everything to change direction and go down even more. So I think that's the difference now, is that what the market is doing on a Friday we didn't do last Friday. We looked better last Friday, and that kind of held things up a little. So if there's any time that we needed either a weather concern, and that doesn't look like it's going to happen, or have China come in and say, we bought not 3 cargoes, but we bought 20 cargoes over the weekend, then that would help things. But I don't think that's going to happen. So I'm kind of concerned that if somebody hasn't made some coverage in their grains by Monday morning, that could be a line in the sand, because you've got good weather coming. The economy and the foreign debt and all these other things better look positive Monday morning. And then after that, if it isn't, then we have only weather to bail us out of these lower prices. But we'll do the charts if someone wants them. We'll send them out again one more time for this next week.
All right. Well, thank you very much for that wrap-up.